Right. Hi, everyone. Today we are back. We are live. I hope you guys are having a great Sunday. Let's see who is joining. Let's see here. It's a great day. Let's see. We are live now. Crack gang join. Welcome. Today is going to be a great day, right? We need to talk about why people are overpaying in taxes, right? Flourish, welcome, right? It's going to be crazy. So today we're going to talk about Sugabuga, welcome. Today is going to be an awesome day. We are going to cover the main reasons why people overpay in taxes. So let's, how's your day been? Have you had a great day? Raul's had a great day. If you had a great day, just say yes, Jerry, I had a great day. Right, who's had a great day so far? All right, let's see who's had a great day. Who's had? I am Shandy Nace. Welcome. Right? Yes. Okay. Thanks, Craig. You've had a great day. Okay, that's awesome. So today's going to be an exciting day. I'm going to cover a bunch of things that people don't talk about. Right? People don't talk about these things, so I'm going to cover a bunch of things. Now, my day was good. What did I do today? So I went to, yesterday, you can't believe, I slept at 4 a.m., right? Working. It's crazy. I went to a networking event yesterday. Met new clients. It's funny because most of them are health professionals. CRNAs and all those kind of people, right? So went to the event yesterday, got home. I had to do taxes for one of my clients. So it was crazy. I slept at 3 or 4 a.m. this last morning. And then I woke up. I had to go to church. So I slept for like 3 hours. So went to church. And after church, I had to... So when we came back from church, what did I do? Yes, I had to. We had to go and see. Obviously, my younger brother, whose wife had a child, and I'm going to tell you guys a funny story. So on our way to seeing my younger brother, so I was kind of sleepy because obviously I only slept for 3 hours, right? So I told my wife, darling, I'm kind of tired. Do you want to drive? She doesn't want to drive. Right, Mika, welcome. So she didn't want to drive. It's funny because whenever we're around, she likes to be a lady, so she never wants to drive. So I told her that, look, so you prefer that we both go and enter into a ditch, right? Rather than taking the steering. So it was funny. It just made me laugh, man, because I was really tired, So saw my brother and then came back home. And I was rushing because I had to do the Instagram live. And here I am today, right? So it's always exciting to talk to you all. And my prayer is that you guys are going to be blessed today. So Deron JS, welcome. So I'm going to kind of quickly introduce myself, right? For those who are new, for those who do not know me. And then we're going to start. So yes, for those who do not know me, right, my name is Jerry Pani. By the way, can you guys hear me? Right? Is the sound right? Awesome. So for those who do not know me, my name is Jerry Pani. I qualified as an accountant 18 years ago. I've been in public practice. So I'm also an international tax strategist. So I've been practicing in, I love taxes, right? And the funny thing is, I was speaking to a guy. He's a CPA in my church, and so I told him, "Oh, I think I should add you, as part of my team, because I don't mind partnering with CPAs." Oh, he says he told me that Jerry he told me that he doesn't like taxes, right? So I think he's an auditor or something, right? Yes. So I've been practicing as an accountant for 18 years now. And I'm also a finance expert and tax strategist. And for most people tell me, oh, Jerry, I don't understand the difference between a tax strategist and a tax preparer and a CPA. Now, I always like to emphasize the difference. Number one, not all CPAs are tax accountants, right? I've been an accountant for 18 years, and accounting is very diversified. You have forensic accountants, management accountants, internal auditors, external auditors. It's really, really diversified, right? Then you have the tax accountants, right? So I specialize in tax accounting and, advising business owners and all this kind of stuff. Simply successful, welcome, right? So for me, accounting is a passion, right? And then, like I said, being a tax strategist is a game changer for me. It's like upgrading myself, because when I used to be just an accountant, I used to ask myself the question, but how do wealthy people manage to pay 3% in taxes? I used to ask myself that question. How come the average person is paying about 25%, but these guys are paying 3%, less than 3%? So now I understand the strategies that these guys use. So we're going to talk about things that are causing people to overpay in taxes, right? So you have two main types of people. You have employees and non-employees, right? So you have employees and business owners. Now, like I always say, the tax code was never designed for W2 income earners. The tax code was designed by wealthy people, for wealthy people, and all of them are business owners and investors. Are you with me? So it's absolutely important, if you want to have maximum benefit, right? You need to have a business. So today we are going to talk about how you can boost your tax refund, right? Or reduce your tax liability. If you are a W2 income earner, or if you are a business owner, or if you are a hybrid person. What do I mean by hybrid? A hybrid person is somebody who has a W2 income, a job, and they also have a side hustle, right? A form of business. So those are the people, I call them hybrid, right? Yes. So we're going to talk about all those different groups of people, and we're going to deal with, so the goal is that I'll talk for about 20, 30 minutes. Then I'll give the opportunity for people to ask questions, right? Around, our topic for the day, right? Jenny, welcome. So let's start now. So recently I was doing, preparing taxes for one of my clients. So let me share this story. I like to share real life stories. So last year she was a W2, so she had a job, right? And then she had a business. Now, last year she had a refund. Why? Because she was able to use her business loss to reduce her taxable income, right? Nurse Joel, welcome. So she was able to use her W2 income losses from her business to reduce her W2 taxes, right? So she had a refund last year. Now, this year when I did her taxes, she went fully self-employed, right? Now, unfortunately, she didn't make a lot of money, right? Again, I treat all my clients equally. She didn't make a lot of money, but her refund was lower, mostly because of self-employment taxes. Are you with me? Unicorn nurse, Jackie, welcome, right? So that's kind of a real life story to explain why people overpay in taxes. So I'm going to give you guys practical solutions, practical tips that you can use to either boost your refund or reduce your tax liability. Right? When I say tax liability is, hi Jackie, how are you? It's good to have you today. Right? It's good to have you. So reducing your tax liability basically means how much you owe, how much you are going to owe Uncle Sam, right? So let's start with W2 income earners. The reason why W2 income earners pay a lot in taxes, there are several reasons, and then I'm going to list a couple of them. So this is the approach that I want us to use. I'm going to state some of the reasons, and then I'm going to provide you with the solutions, right? Now, one of the reasons why W-2 income earners pay, have either a low refund or they end up owing is because, number one, they did not seek professional advice, right? CNBC and Acorn, they did a survey and they realized that 99% of those surveyed did not seek professional advice. They sought advice from their family members, their siblings, their parents, Google, and all those crazy sources, I call them, right? Now, professional advice is absolutely critical, right? So that's one of the reasons. Again, ignorance, lack of information, which boils down to lack of seeking advice from the right sources, right? We are in a day and age where everybody is an expert now, so you just have to be very careful. Now, the other reason why W-2 income earners tend to pay either a lot in taxes, right, is because when you are filling in your Form W-4, I always recommend claim the least amount of deductions, right? Because you have to understand how deductions work. So when you have your earned income, right, your earned income is adjusted by these deductions. Are you with me? And that would give your taxable income. So if you claim a lot of deductions, what is going to happen is that your taxable income is going to decrease, right? So you may end up paying, less. So you may end up withholding very little amount in taxes, right? So which means that you may end up owing when your tax return is filed. So what I always recommend is that don't claim any deductions or exemptions when you're completing your Form W-4, and that would help you a lot. Are you with me? Now, if you are a W-2 income earner, like I said before, you have to understand that the tax code was never designed for W-2 income earners. So the solution to that problem is that you need to have a side hustle. You need to have a business, right? People always tell me, oh, Jerry, I don't know what business to do. I don't know what to do. The thing is that you have to mingle with the right people. Are you with me? Now, in one of the videos, I did talk about the 5 ways by which you can start a business, right? You can start a business based on your skill set. That's how I became an accountant, right? I started my business based on my skill set as an accountant. I started with things like bookkeeping, payroll, and all those crazy things. I did all of them for over 18 years. Are you with me? So it got to the point where my business income was able to replace my employment income. Then I quit my job. So you can start a business based on your skill set, right? Like if you're a nurse, you can start a med spa, IV hydration, all these things that people are doing. If you're a CRN, whatever you are, always think about what can I do. Now, let me help you out here. If you are starting a business, always ask yourself, how can I differentiate myself from the competition? Now, this is absolutely critical. If you want to be successful as a business owner, ask yourself, what can I do differently? Right? What are my competitors doing? What are my competitors doing? What can I do differently to create value? It's all about value creation. When people see the value that you are creating, right? Right. I hope you guys, my dad was trying to call me. Right. Can you guys hear me again? Can you guys hear me? Right. So if you can hear me, just say yes, please. If you can hear me, say yes. Yes. Can anyone hear me? I hope we are still connected. Can anyone hear me? Right. Anybody? Can you guys hear me? Let's see. Can you guys hear me? Let's see. Right? I hope awesome. We can. That's awesome. My dad called me. I don't know. He got disconnected, right? So, like I was saying, if you have a business, you have to always ask yourself, how can I create value? What can I do that is different from what competitors are doing, right? So like I said, you can start a business based on your skill set. You can also start a business based on a passion. It can be photography, it can be traveling, right? It can be anything that you see is a passion. You can convert that to what I call an income generating activity, and that will make a difference, right? Again, in one of the Instagram lives, I did talk about the 5 ways by which you can start a business, but because that's not today's topic, I will skip the other ways, right? You can follow one of the videos, but the essence is that if you have a business, you can easily claim a loss for 3 years without being audited, right? It's so easy. Many people have done it, right? Now, generally, businesses are expected to make losses within the first 2-3 couple of years. So it's so easy to make a loss of $10,000, right? And you still not be audited, and you get tremendous tax write-offs, from that. You create a loss. I don't mean you just invent numbers, right? you understand what I mean? You create a loss, and then you use that loss to offset your earned income, right? And that will reduce your taxable income. So having a business is absolutely critical. It doesn't matter what kind of business it is. The most important thing is that. Now remember, somebody who starts a business is always better than somebody who never started. It is actually better to start and fail than to not start. Because when you don't start, you are not different from somebody, who has never done anything, who didn't even have the knowledge. Are you with me? So it's so important as a W-2 income earner, you need to have a side hustle. That will make tremendous, difference, in your tax position. Now, there's something else that I'm going to talk about, which I'm personally not a fan of this, right? Now, again, one of the ways that people can reduce their taxes is by obviously putting money in tax deferred portfolio, tax deferred accounts. I personally don't like them, right? But it doesn't mean that I cannot talk about them, right? So tax deferred accounts would be things like 401ks and traditional IRAs, right? So those ones would defer your taxes. The main issue I have with tax deferred portfolios is that, number one, taxes are guaranteed to go up. If you ask any tax expert, they will tell you that taxes are guaranteed to go up. Now, if you want to win like wealthy people, you have to understand what wealthy people do, right? If you look at the executive of the S&P 500 index of companies, the S&P 500 index, right? Now you realize that these executives, most of the time, they kind of do what we call the employer match, right? And then they can invest the orders, right? So if you are a W-2 income earner, you can take advantage of those tax deferred portfolio, but remember, something awaits you at the end of the tunnel, right? Now, that's not what I would recommend, right? Now, I'm going to show you guys another strategy which I think will make a lot of sense. Pre-host. So we spoke about starting a business. Now, the other portfolio that I would always recommend if you're a W-2 income earner is what I call the real estate portfolio. Now, the real estate portfolio is one of the most powerful portfolios that wealthy people use, right? So wealthy people use real estate because of, depreciation benefits, right? Bonus depreciation and all those things. And then the real estate portfolio can give you passive income for life, right? But wealthy people use real estate a lot, passive income, as tax planning strategies, right? Where you have a bonus depreciation, and then we have what we call cost segregation studies. So there are so many strategies that as a W-2 income earner, you can take advantage of within the real estate portfolio, right? So I would always recommend you need to start thinking about either short-term rentals or long-term rentals, right? That would make a difference. Just the depreciation you're getting from those assets, trust me, will reduce your taxes. It can turn around the story. So instead of you owing you can actually get a refund, right? It's crazy. So these are simple ways that you guys can use to optimize your taxes if you are just W-2 income earners. Are you with me? Now, if you are, I'm going to give another strategy right here. If you are a W-2 income earner, right, and you have a mortgage, so generally, I spoke about in one of these sessions, I spoke about the differences between a standard deduction and itemized deductions, right? Now, it's a standard deduction is basically like a tax-free allowance, tax-free amount that everybody is entitled to have. Are you with me? Last year was $13,850. Are you with me? Now, if you are, so based on experience, this is what I found out, right? If you are single and you have a main residence, so you are paying mortgage, paying real estate taxes, you are more likely going to itemize. Why? Because if you start looking at your real estate taxes, the mortgage interest and all those kind of stuff and other expenses, including charitable donations and all those kind of stuff, you can watch the videos, which is called Schedule A, right? I did an Instagram live specifically on Schedule A. You can watch it there. Now, so you are more likely going to itemize if you are single and you have real estate taxes and all those kind of stuff. Now, if you are married and you have a property, right, a home, right, you are less likely going to itemize. However, I need to specify this. Remember, 13,850 times 2 gives the standard deduction for a married couple filing jointly, right? I'm not very good with mental math, right? It's $27,000, something like that. So, to hit that $27,000 is quite tricky. However, again, this is how you can look at it. If your property taxes and mortgage and all those things, real estate taxes and mortgage interest are over 20,000, right? Then you probably will, which means you probably have a house that's costing over $800,000, over $1 million. Then you probably would have to itemize your deductions, right? So understanding this can make a difference. Now, if you go to a church or you donate money to charity, this will only benefit you if you are itemizing your deductions. Now, this is a misconception that people don't understand, right? Doresa, welcome. So if you are itemizing your deductions, then charitable donations will make a difference. Are you with me? But I'm just going to give you guys a little tip here. If you have a C corporation, right, you can basically use it as a way to distribute charitable donations, because that would go directly on a Schedule C of a corporation, right? But you have to understand that you don't just form corporations, because most people who form corporations there are various reasons, right? And that's what we call is part of having the right entity structure. So these are strategies that if you are a W-2 income earner, you can take advantage of. Are you with me? Now, so we're going to talk about the business owners. Remember, the tax code was designed and it's always designed and it's always going to be designed for business owners, right? All the new tax laws are for business owners and investors. So if you do not have any form of business, you are not doing yourself any favor. Everybody needs to have a business. Everybody needs to have a business. You should not, like I said, for those who are just joining now, Shandoff, welcome, right? We've already covered the strategies that W-2 income earners can take advantage of. For those who are just joining now, I'll give you just a quick recap right here. So you can take advantage of a business. We've covered businesses, we've covered real estate, right? We've covered understanding schedule, the itemized deductions, Schedule A, and all this kind of stuff. Are you with me? Now, we are going to look at the strategies that business owners can use. Now, as a business owner, now I have been advising business owners for over 18 years, right? advising business owners in all aspects of finances and accounting, whether it's, cash flow projections, business plans. I've done all of those. Are you with me? Now, I'm going to explain to you guys why many business owners are overpaying in taxes. It is absolutely crazy. Now, who can tell me the number one reason why business owners are probably overpaying in taxes? Who can tell me the number one reason why? Who can guess? Who can tell me? I want somebody to put in the chat box, please. The number one reason why business owners are overpaying in taxes. Who can tell me why? One person to guess, please. Just type. Right? Another reason. Right? Yes. So it's oh dear. Right. So let me just help you out here. Remember, I have been advising business owners for 18 years, and I realized that most business owners start a business before seeking professional advice. That's what I found out, right? Most business owners start a business before seeking professional advice. And in my 18 years of public practice, I realized that many people messed up things before coming to me, right? And it still happens every day. Like I spoke to one of the nurses, she said, "Oh, Jerry, I need to get your advice." After she'd already been advised by some business consultant, as they call themselves, right? But she didn't need to form a C corporation at this time. You don't need to. I always tell people, there is nothing wrong with starting with a schedule, with a basic sole proprietorship, right? So the main reason why most business owners are overpaying is because of they do not seek professional advice, right? And which is lack of information, basically, right? So I'll just kind of help you out a little bit here. Now, let me just help you out so that you guys will understand how accountants work, right? So the easiest business structures to manage would be things like sole proprietorships and LLCs, because these go on a Schedule C. Are you with me? So if you are just starting something and you are not sure whether you are going to do this for the next 2 to 3 years, you are just testing the waters, you don't know if it's something you are going to do in the long term, then I would say just do it as a sole proprietorship, or you can do it as an LLC. Are you with me? Why? Because these are not as complex as S corporations and C corporations. Are you with me? Now, most people don't understand that preparing taxes, the filing requirements for partnerships, for S corporations and C corporations are different. Are you with me? So these partnerships, C corporations and S corporations have different filing deadlines from your individual tax returns. So generally, you have to file them 1 month before the due date of the individual tax returns. And then you have to generate what we call a form Schedule K1. Now, this K1 is you would now give it to the members of the LLC, and they are going to use this form to file their individual tax returns, right? Like recently, last week, I filed a partnership return for a client, right? And because she needed it urgently, she said, "Oh, Jerry, can you do this for me?" I remember that day I was working at midnight, 1 a.m., right? For me, I don't mind going out of my way, out of my comfort to help my clients. That's just who I am, right? But I understand that most people don't do that. For me, again, I've been practicing for 18 years. And so that's kind of what happened with this lady. So having the right structure is absolutely important. And getting that foundation right from the outset is absolutely critical. If you are forming a company, you have to have a clear vision. I'm going to share real life stories with you. A client came to me last week. He said, "Oh, Jerry, I want you to do my taxes." So I started asking him questions, and the guys told me that, look, he's been putting multiple businesses in one LLC. You don't do that. Look, let me tell you guys something. If you have different business activities, separate your LLCs. There's no reason why you should be doing real estate in an LLC and then combining it with some other stuff. It makes no sense. Never do that. Are you understanding? So seeking professional advice from the outset is absolutely critical, right? And I always tell people, if you have a question, feel free to ask me. I will make time to help you out if I can, right? Everybody who knows me, I'll always go out of my way to answer your question. I don't need to charge you. Why should I? Right? If you have a question, just ask me and I'll answer. Are you with me? So it's absolutely critical to have your business entity structure right. So, and that takes me to one of the reasons why people are overpaying in taxes, because if you have the wrong business entity structure, you would end up overpaying in taxes. Right? So you need to understand the difference between So you need to understand the differences between a C corporation, an S corporation, an LLC, and a sole proprietorship, including 1099s NEC. So 1099 NECs are independent contractors. So those ones are treated just like sole proprietorships. Are you with me? Right. So getting that structure right from the outset is absolutely critical. Are you with me? Now, let me I've done a separate session explaining the differences between C corporations, S corporations, and all these things. If you are new to this session, to my sessions, feel free to watch those videos, right? Now, for those who are joining for the first time, right? So my name is Jerry Pani. I have an MA in accounting and finance. I have an MBA. I'm also a fellow chartered certified accountant. So I've been practicing for over 18 years in public practice, doing taxes, advising business owners. I'm also a finance expert, and then I'm also a tax strategist, right? So it's so important to ensure that you speak to the right expert. And that's another reason why people end up overpaying, right? I have seen real life cases where I'm going to share real life stories with you. There's a case where a nurse went and gave her a tax return to some crazy guy. She made a lot of money during COVID. This guy inflated her revenue. She ended up being audited by the IRS. Right? You have to be careful. I'm going to explain another red flag. Another nurse gave her tax return to some guy to do it. Right? A paid preparer, and this paid preparer did not put her name on the tax return of this nurse, thereby exposing the nurse 100% to an audit. This ridiculous, I just hate when I see those things. These so-called tax professional, she inflated things like the itemized deductions. It was ridiculous. Donations, crazy things. Right? So you have to be careful. Whoever does your taxes, you have to make sure that they have the right experience and that they are qualified. Are you understanding? So she's Idaya. So I am based in Houston, right? But I do have so many clients in New York. New York is a funny state. I don't know why people live there. Their taxation system is very complex. New York is a complex state. And again, this is just me being honest. If I were you guys, I'll walk out of New York and come to a tax-free state where you can take advantage of the tax-free status, right? Where the cost of living is cheaper, where you can get bigger houses, bigger cars, and enjoy life, right? If you have family members there, they can come and visit you. And then if you visit them, you can claim that trip as a tax write-off. Are you with me? Now, remember, wealthy people think in terms of tax benefits. The middle class just do things randomly. Whatever you do, you always have to ask yourself the question, what is the tax benefit? Think like a wealthy person. Think like a business owner. What is the tax benefit of this trip? Now, that takes me to the next point. One of the reasons why business owners are shooting themselves in the foot is because of poor record keeping. I had another session to talk about record keeping, so I'm not going to repeat myself. You can watch it there. But it's absolutely crazy. right? Record keeping is critical. Now, I'm going to explain to you a bunch of, just because I want to talk for about 5 minutes, I'm going to give you guys some tips on simple tax strategies that you can implement, right? And these are for people who have a form of business. Now, for those who are just joining, like I mentioned before, you need to make sure that you do your best to use the real estate portfolio for tax planning purposes, right? There are short-term rental loopholes. You have cost segregation studies. These are things that can accelerate depreciation, which you can use to reduce your taxes. Are you understanding? So real estate portfolio is a must-have for anybody, right? It's not only for wealthy people. You have to understand that. Now, the second thing I'm going to ask you guys is that always think from a tax perspective. So remember, the tax law says that what the expense has to be ordinary and necessary. Are you with me? And it shouldn't be lavish. Are you understanding? So which means that I don't make the determination that something is necessary for your business. Are you with me? I bought this this quite expensive microphone, but it's necessary for what I do. Are you understanding? You like these foldable phones, I bought it, is necessary. This is quite expensive phone, right? But I buy these things for businesses. So what I'm trying to say is that as a business owner, always try to think in terms of tax write-offs. If you are flying to a state, to any state, you can claim that trip as a tax write-off just by planning the right way. And I'm just going to help you out here. If you are flying to any state, when you go to that state, have in mind that you're going there on a business trip and do your best to talk about your business to people that you see there. Promote your business, give out business cards, and the entire trip plus every car rental and accommodation, hotel accommodation is a tax write-off for you. Right? There are simple things like your cell phone that you can also claim, right? Now, you have what we call a home office deduction. So these are things that you can also take advantage of. Home office deductions. You have the simplified method, which is based on safe harbor, but that method is really limited, right? So I prefer the standard method because you can, it's crazy right here. You can get a lot in deductions, right? With the standard method for home office deduction, you would basically take your household expenses, like the utilities, all the utilities, whether it's the rent or the interest on the mortgage, the property taxes, repairs of the home, and all those things, and then your business is going to pay for a portion of this. Is that not crazy? So you have home office deductions. There are other strategies that you can use, right? If you have a business. Now, there are other strategies. For example, if you have children, right, usually above the age of 7, which you can pay these children and you can claim that as a tax write-off. Whether you are a sole proprietor, you can do that. Whether you have an S corporation, you can pay these children for 2023, 13,850, and that's straight away a tax write-off. So imagine that you have 4 children, right? Having children is wealth, right? 4 children, 13,850 by 4, that's already tremendous tax write-offs. But you have to ensure that obviously they do some work, right? Yes. So these are strategies that you can use. Now, there are other advanced strategies, right, that business owners can use, and this is where tax planning comes. Now, let me just take this here. You see, most people don't understand the difference between a CPA and a tax strategist. Are you with me? A tax strategist will normally come up with a tax plan. They can also do your tax return, and they have to implement the tax strategy. Are you understanding? So there are so many tax strategies out there that can basically reduce your tax rate to 0. Just like wealthy people do. Are you understanding? So what I'm trying to say is that you are not alone, right? You are not alone. You have to do what works for you. It's so easy to find yourself in a rat race where you keep working, you file your taxes, you work, you file your taxes, you work, you file your taxes, and you end up broke because you never took action, right? So it's so important to take action when it comes to to seeking professional advice. Now, So there are so many tax strategies. You have like oil and gas portfolios. You have charitable mining donations and all those things. So there are so many tax strategies that people making over $150,000 can use. And then there are tax strategies for people who are making $500,000. And then there are tax strategies for people who are making over $1 million. And then you have tax strategies for people who are making, $10 million and $5 million. So there is a tax strategy for everybody, right? But the goal of today's session was to talk about basic strategies that everybody can use, like the home office deductions and all those kind of things. Making sure that you can even rent out I think Augusta, you can even rent out your house to your business, right? So there are so many things that you can do with the real estate portfolio. There are so many tax strategies are available right there, right? So in our day and age, paying taxes is a choice. Paying taxes is a choice. Ask yourself the question: if your last 5 years, right? If your next 5 years look like your last 5 years, will you be totally happy? And then if not, then take action. Are you with me? So I'm going to give an opportunity for people to ask questions now, just because of our time. Remember, I slept at 3 a.m. yesterday, so I have to go and sleep for an hour. Then I come back to my office and do some work. So let's see who has any question. We've looked at a bunch of, and to be honest, there are many more tax strategies I could talk about, but time is against us. Right? There are so many more tax strategies, but having the wrong entity type can be a cause of you having to overpay in taxes. Are you with me? So that is absolutely important, right? So we've also spoken about like how you can optimize your travel expenses, how you can fly to different states and claim those trips as a tax write-off. Just because you have to position yourself. Are you with me? Have it in your mind that I'm going for a business trip, right? Even if I'm going to see my family members, I'm going for a business trip. I'm going to give out my business cards. What have you got to lose? You tell me, right? You've got nothing to lose. Give them your business card. Take pictures. Guess what? Take them to a restaurant and claim it as a tax write-off, right? Did you even know that you can organize your birthday party and claim it as a tax write-off, right? Did you know that? You can claim your and then another strategy which I actually forgot, you can use there's a health savings account which you can also use, right? And that would also help reduce your taxes, right? But the biggest tax benefits is from owning a business, and you have to be intentional about it. Give out your business cards, take people to the restaurants and claim it as a tax write-off. Again, you can even organize your birthday, right? But you're not telling the IRS that I'm organizing my birthday. Are you with me? So organize your birthday party, right? But convert it to a business event and let your business pay for the birthday party. And then you claim it as a tax write-off. That's how you do it. That's exactly what wealthy people do. Are you understanding? It's all about strategic positioning. This is crazy. So let's see who has any question. Who has any question? Right? So let's see here. It says, is it best to get a business credit card if you already have good personal credit with 1 year LLC? Yes, I would always recommend have a business credit card, right? Why? Because even if your business credit card is maxed out, it has no impact on your personal credit. Like when I opened I started a new business last year, created an LLC. I'm with Bank of America, right? And I applied for a business credit card and I got it right away, right? I maxed out the card. Do I really care? No. I need the tax write-offs anyways, right? Now, let me help you guys right here. Now, when you have a business, remember you need tax write-offs. You have to start thinking like business owners, right? Look, broke people try to be debt-free. Wealthy people have understood the power of leveraging debt, the right type of debt. I'm not talking about consumer debt where you use your credit card to buy clothes, right? If you are a business owner, you have to make sure that you get a business credit card. You use it for business expenses. I never rush to pay off my business credit card because guess what? Any interest on the credit card is a tax write-off for me. And I need the tax write-offs anyways, right? So why should I be rushing to pay off the credit card? Plus, having a balance on that credit card is positive, right? Because remember, credit history is based on having a credit balance. A credit history is not about you being debt free. So if you are trying to be debt free, you are just shooting yourself in the foot right there. So same thing with businesses. You have to make sure that you use your business credit card for all those things. And then just take your time to pay. Any interest accrued on the credit card is a tax write-off, right? So does that answer your question? Yes. So the question is, yes, you need to get a business credit card. If the bank does not give you a business credit card because of one reason or the other, there is a solution for that. You can use a personal credit card and you are going to use it 100% for your business only, right? So that it is solely dedicated to that business. And then any interest accrued on that credit card is going to be a tax write-off as well, right? So any other question? Let's see, we've only got 5 minutes. So any other question, right? We've looked at how you can optimize your situation, right? Let's see. Does the state you open the business in matter for state tax purposes? Now, that's a very good question. But you see, there are so many answers to that question, right? It depends on many factors. It depends on where you are in life, right? If you're a wealthy person, multi-millionaire, then you probably want to create an LLC in a state where your assets are fully protected. That is part of what we call asset protection, which is a pillar of wealth building. Are you with me? Now, if you are just somebody who is getting started, generally, I would say simplify your life initially. Remember, you can always change all those things. You can always change how an LLC is taxed. You can always change the state of the LLC. If you are not yet a multi-millionaire, don't complicate your life. Just start your LLC in your state of residence to simplify your life. Why? Because a couple of years ago, let me share this story. That will answer your question. A couple of years ago, I formed an LLC in Nevada, right? Even though I was based in Texas. Now, the entity that I had to form to register with the Texas Secretary of State, and now I had to be paying fees every year, right? And it was just a lot of headache. And I had to transfer the LLC from Nevada to Texas. And since then, I had peace of mind, right? So, but like I say, always simplify your life. When you become very wealthy and you are more concerned about things like asset protection, we can always move your LLC from your state to another state and all those kind of stuff. Or just form a new LLC, right? I know one wealthy guy, he has like 20 LLCs, right? So don't worry about complicating your life. I tell you guys, always simplify your life. When you start making more money, we can talk about the complex strategies, right? So does that help you? Any more questions? Any more? Bring your questions, right? Let's deal with those questions. Let's solve all those problems once and for all, right? There's no reason why anybody should be overpaying in taxes. One of the mistakes that most people make is that this is crazy. They come to me after the event, right? If you come to me with 2023 tax return, there is very little I can do. The best I can do is to explain strategies to you in the areas of business expenses and tax write-offs, right? Those kind of things. But there are many advanced strategies that are time sensitive. And that's why speaking to a tax strategist so that who would do your tax plan all year round is absolutely critical, right? But generally, like I say, tax strategists would normally work ideally because I have a separate business for tax preparation and then I have a separate business for tax planning. Are you with me? So my tax planning business is separate, right? The tax preparation business is separate. So tax planning is all year round. And that is why wealthy people, they don't care about April deadline because they already know how much they're going to give Uncle Sam or how much refund they're going to get, right? So generally, tax strategies would work with people who are making over $150,000 to millions of dollars, or those who owe over $30,000 in taxes, right? So if you are owing over $30,000 in taxes or making over $150,000, $200,000 to millions of dollars, then you need a tax strategist if you want to do yourself a favor. Uncle Sam does not care. They want you to pay the money, right? So you have to help yourself, just like wealthy people do. So any more questions? So we only have, let me see, we have 2 more minutes, right? So if you're enjoying the session, just say, yes, yes, I am. Who is enjoying the session? Who is enjoying the session? Who is enjoying the session, today's session, right? So any more questions? Any more questions? Awesome, awesome. Oh, crank gang, right? Oh, Ashley, how are you? Awesome, awesome. So thank you, guys. So I don't think we have any more questions. So I'm going to vacate my office, take a break. I slept at 3 a.m., so I need to take a little break, a little nap, right? So what I'm going to say, guys, you guys take care of yourself. Yes, hi, Ashley. I'm going to attend to you, don't worry. Right? So you guys take good care of yourself. Just do what you have to do. And like I always say, start a business. You would not be doing yourself a favor if you don't have a business, right? You have to start. So, guys, you guys have a blessed Sunday. And if you have any topics that you want us to cover, just let me know. You can DM them to me, and I will talk about those topics. Whatever thing in taxes, whether it's finances, anything, just let me know. We can talk about all those things, right? So, you guys have a blessed Sunday, right? Again, if you guys want to organize a webinar and you want me to come and talk, let me know, right? If you want to organize a webinar or something, or an Instagram live, and you want me to be a guest speaker to empower your communities, just let me know. We can talk about it, right? I'm not going to charge you, don't worry, right? I don't mind sparing 30 minutes to an hour of my time. It's always a blessing to empower people, right? So you guys have a blessed Sunday, and we'll continue next week by the grace of God, right? You take care of yourself, and we'll catch up. So peace to you all. Let's see here.